owe a payment way too. I also concluded some points about the impact of the owe a payment method on sellers. To suppliers. The seller uses OA to settle accounts with customers, which can attract more buyers in the short term and increase sales in the long run. The supplier provides customers with credit terms, which may cause the following problems: tight cash flow. There is no doubt that when the seller provides goods or services to the customer without receiving payment, it will directly lead to difficulties in capital turnover, especially when the credit period exceeds 3 months or half a year, increasing credit risk. Thousands of miles away from foreign customers, buyers may delay payment or default at any time, increasing the seller's bad debt risk and affecting the financial stability of the seller's company. Increasing financial costs. In the current global economic downturn, the possibility of buyer defaults increases, and the seller's risks rise accordingly. The default of several large orders may cause a company to go bankrupt. UKO has a customer who has been cooperating with UKO since 2016. Her company is a purchasing office for a foreign company. Initially, considering that the purchase amount was $20,000 to $30,000 US each time, the two parties agreed that the payment method was 30% in advance and 70% before shipment. After some time, due to funding issues, the customer often called to communicate before delivery, wanting to sell on credit. UKO refused and the customer chose other suppliers in 2020. In 2023, the customer contacted us again and agreed to work with us on the previous payment method. It turned out that the other suppliers who cooperated with them had problems with OA cash flow and could no longer carry out normal production, impacting on pricing strategy. To compensate customers for the risks of selling on credit, sellers may need to increase the price of their products or services, putting themselves at a disadvantage in market competition. Impact on enterprise development. Capital occupation and bad debt risk may limit the seller's ability to reinvest and expand, affecting the company's long-term development and market competitiveness. Impact of foreign exchange fluctuations. Exchange rate fluctuations may result in a reduction in the actual payment received by the seller, resulting in exchange losses. In summary, we hope that all partners will pay great attention to the management of accounts of cash flow, rather than just focusing on business expansion and market share. When we survive the long period of economic downturn, the cold winter of the market has frozen the bad actors to death, and what awaits us is the warm spring.